Markets were all over the place in this quarter. Shares tanked while boring old bonds quietly stole the show. Today, we present your Q1 update.
We're back in your life, and forget about all the other episodes we filmed so far this year. This is the one to see where we break down what happened in the market from January to the end of March. Michael, a small orange man, made a huge impact to the world.
All right, cool. Yeah.
Big hands?
I don't know, mate. Yeah, look, it was a wild ride. I mean, at the start of the year, was predicting, I was real bullish, which is, not like me. 10% house price growth. And now I think we're flat at best. It has been such a roller coaster over the first 3 months of the year that mate, I don't even know what's going on anymore.
Yeah. And the big thing is that the market's had a huge run, and particularly we're talking about the US share market, had a huge run over the past couple of years.
Yeah.
So already steaming ahead, and I didn't think we were going to hit similar sort of numbers. But really, it's just tariffs, and tariffs.
Yeah. I mean, that's the big theme of it, right? Is when the political changes that come in, impact economies, impact markets, impact the share market, it can happen in really wild swings. And that's why you'll see most of the time when you see politicians talking about issues or things that they're going to do which will impact, financial markets, share markets, really measured in the way that they talk about it, really tapered language, very specific words. Your man in the States, more of a howitzer, just absolutely blowing it to bits, seeing how far he can push things before they break.
Yeah, absolutely. And so important to remember that. So this is our quarterly update for our investment clients at Lighthouse. If you want to talk about some investment advice, reach out. So we are only talking to the end of March, and a lot of this chaos also fell well into April as well. Very much a mixed bag though. Like the share market at one point was down 20%
Yeah.
Important to note that is the share market, and particularly the US. If you have a diversified portfolio, it shouldn't drop anywhere to that extent. But tariffs have pretty much dampened investor sentiment. There's concerns about inflation. There's concerns about a recession in the US. It's interesting how one person who can at any point decide, I don't want to do this anymore, can have such a big impact on world markets.
Who would have thought that maybe people that were good at winning elections weren't great at actually running countries? Yeah, look, and I think the other thing I want to talk about there, James, is there's a lot of volatility at the moment up until the end of the March quarter and then through into April. Volatility does create opportunity, but it also creates opportunity for people to make the wrong decisions. So, James, I know we've talked about it before, but now more than ever, I think it's time. If you're seeing the volatility in the portfolio, what do you do?
Absolutely nothing, unless you need the money in the short term. Then you shouldn't have been there to start with at the moment. Say for our clients who are investing for their retirement or like over a decade, whatever it might be, we know that at some point, and we do a lot of risk profiling up front, how comfortable are you with your investments dropping before you would really start to worry and think about what you're going to do?
Yeah.
Say a balanced portfolio for over the quarters dropped maybe like 3%, right? For a balanced portfolio during the global financial crisis, we go, hey, this can drop up to 15%. The thing I don't know, Mike, is whether it's going to be one of those big, long-lasting events like the tech bubble, like the global financial crisis, COVID, where we look back and go, wow, that had a huge impact. Or is it going to sit more in one of those areas where markets freak out pretty much every year? The average drop in the market at some point during the year is 13%. It might be Greece's economy. It might be China's growth rates and the concern that it's not going to be the same going forward. There is examples every year, multiple versions. An economist picks a recession 8 times before it actually happens. We just don't know what's going to happen right now.
Yeah, 100%. So let's look at the quarter in a bit more details. James, with volatility again, there's always winners and losers. Talk to me about some of the winners, and I want to know some of the surprise winners in there as well.
So boring old bonds. I mean, bonds did exactly what they were meant to do this quarter. So if we have a look at it, global bonds went up about 1% over the year. They're at about 4%. New Zealand fixed interest is about 0.7% over the quarter, up about 6% over the past 12 months. The really interesting one, though, is global infrastructure. And global infrastructure in terms of like toll roads, airports, those types of investments, they've had an absolute bloodbath for the past couple of years because interest rates have been so high. But Michael, what has been happening?
Interest rates been coming down.
Inflation's been coming down as well. It has made it far more attractive. So over the quarter, it's up 3.5%. Over the year, it's up 18.9%. Now, in terms of the losers, though, Michael, there is really interesting data here where we look at the quarter versus 12 months. So when we look at New Zealand shares, Australasian shares, global shares that are hedged back to New Zealand dollars, they are all down over the quarter, but over 12 months, they are still up. Global shares are up 13%, and then hedged back to New Zealand dollars still up 7%. So while we've lost a lot of our returns over the quarter, it is quite interesting to see that there are still really strong results over 12 months. Important to know that that is to the end of March, and then markets did drop further in April.
And why do you think that is? I mean, traditionally, the first thing that would pop into my head is flight to safety, right? Flight to low risk assets. And arguably speaking, Australasian shares a little bit more risky than some of the others.
I think that's safe. I mean, when there is news that comes up that is not expected, people are always going like, oh, I now know about tariffs. I'm now going to sell my investments, move to something safe, and then come back in the future. The market's already dropped. The market's already reacted to the news. So you're completely wasting your time. So yes, a lot of people, when the news came in about tariffs, was like, this is really bad news. This could result in a recession, high inflation, geopolitical risk up the wazoo. So we're going to move more money to cash and to bonds.
100%. So those are some of the winners and some of the losers. James, in terms of your portfolios or Lighthouse's portfolios, how's the performance been?
So we're going to talk about returns, we're going to talk about performance, and we're going to do it after this break. Lighthouse Wealth are leading the way when it comes to independent financial advice in New Zealand. If you have a lump sum of money and you're not sure what to do with it, how you can achieve your goals, whether you should be investing into shares, looking at property, paying down debt, reach out to Lighthouse so you can get a personalised financial plan. Information is in the show notes below. Now back to the episode.
James, tell me about the returns.
So I gave you the breakdown of kind of what happened to international shares, New Zealand shares, bonds, property. There's two interesting numbers. I want to focus mainly on a balanced portfolio, right? So that's 50 to 60% in shares and property, 40% in cash and bonds. So over the last 5 years per annum, the return for a balanced portfolio is 8.3%, which for that level of risk, we're really, really happy with that number. The interesting thing, Mike, so we're talking about the share market, how much it's dropped. The quarterly return for a balanced portfolio is still 0.2%. So we actually haven't gone into the red over the quarter. Now, I think highly likely that the April to the end of June quarter, we will be in the red. That's certainly what it's looking like. But a lot of the damage was done in the first quarter of the year, which just shows how important that diversification is. We all want to chase just US shares, invest into the S&P 500. Warren frickin' Buffett just keeps talking about, and I think does quite a lot of damage with that kind of discussion. But for the average investor, having a risk profile completed, making sure that you're invested into bonds, some property, some local shares, some international shares, you can just see how important it is to mitigate risk. Because when we think about the past couple of years and the market just going one way, nobody wants bonds. Nobody wants to think about
not sexy.
how they mitigate
Fixed
their risk.
Interest. No, 100%, right? And I guess that's one of the things is, if you're out there just chasing returns, it's a fool's game. Like at the end of the day, we've seen that with NFTs, we've seen it with crypto, we've seen it tons of times in the share market. I think New Zealand has like the fourth highest global participation rate in the share market or something. And we know that a lot of that is direct investing. So basically, if you're out there chasing those returns, good luck.
So one thing I saw yesterday, Mike, which I found quite interesting, was our research house did some projections on different countries and their growth rate over the next 5 to 7 years per annum for their share market. So we talk a lot about people who just go, just invest into the S&P 500. Very interesting. The US had the lowest forecast of any market at about 4% per annum.
Yeah.
New Zealand, somewhat depressingly, was only at 6% per annum, considering all of the pain they went through.
Yeah.
But when we look at Europe in particular, I think they were sitting at 8. Japan was probably quite similar numbers, which does really bring you back to that. I just think that very risky thinking about just all into the US.
Yeah, 100%, right? And there's a number of different factors that will play into that, right? Current valuations, risk in the market, geopolitical risk, what are they exposed to? What is the composition of that economy as well? Because remember, you are just backing companies in that market. So yeah, a ton to think about there.
The other piece I wanted to talk about is I've got this beautiful graph, which we might bring up on the screen. There is a lot going on. It almost looks like a chessboard, which it talks about the best performing sector in each year over the past decade. And interestingly enough, Mike, of 4 of those 10 years, New Zealand shares were number 1 in 2015, 2018, 2019, and 2020.
Yeah.
But they've been pretty close to the bottom ever since. Now, this graph does show that, like, pretty much if you're going, I'm really bullish on this one particular sector, look at the numbers. They all pretty much are at the top and the bottom over the past decade. Mike, what do you think the lessons are there?
Yeah, look, I mean, pick it, not just picking stocks, picking markets, picking asset classes, picking the individual companies in them. It is impossible to outperform the market consistently over the long term, right? And we see that. And some people might be sitting there being like, oh, but this person's done it and this person's done it. Yeah, look, there's going to be people who do it over a period of time. But as the fund grows, as markets change, as their investment philosophy changes, or if their investment philosophy doesn't change and the markets change around them, pretty hard to do.
So I know we never like it when we don't get the returns that we're after over short periods of time, but the reality is that it's not about timing the market, it's about time in the market. And if you're trying to go, what should I be doing right now? What is the right short-term play? You're actually just going to end up losing money.
Yeah.
For all of our clients out there, if you do have any questions about your portfolio, please reach out. We're also going to send you an email after this as well with your quarterly report for your portfolio. Of course, when you catch up for your next financial review, we can tackle all of that, update your plan for your situation. But for those that are thinking about their Kiwi savers or they've got other investments, their shares is whatever it might be, if you make decisions on the news of the day and you're moving money in and out of markets, I promise you, I guarantee you will lose money over the long term. Do not think short term, think long term.
100%.
All right, so we're going to wrap it up right there. Much love to Lighthouse Financial for sponsoring this episode. Please subscribe to our YouTube channel to see all of our amazing content. Give us a review because you know that we're making a big impact to Kiwis' lives and you want to make sure that everybody is taking control of their financial future. Give us a like and we'll catch you next time.
Cheers.